Welcome back, everybody. This is going to be the watch list for Monday, August 4th. And it's hard to believe that we're actually getting into the latter half of the year as things start to heat up from an overall economic perspective. So let's do this. Let's go ahead and start with the economic data, as we always do. Monday, we have factory orders at 10 a.m. Eastern Standard Time. So this will be something we're going to want to be cognizant of at least 30 minutes into the market open. On Tuesday, we're going to have more data with the U.S. trade deficit. We're going to have PMI and ISM services. So these are going to be important numbers where you're not going to want to get into a trade. And perhaps you might just want to wait until the data drops and then take the trade after. So I'm thinking after 10 a.m. Eastern Standard Time. Wednesday, we have nothing. We're pretty good to go. Thursday, this is where it's going to get a little contentious, okay? Initial jobless claims. So the market sold off exponentially on Friday because the U.S. government labor statistics were exceptionally worse than what they had prior reported. And they actually restated their numbers, which created a panic in the market. Now, the repercussion is that the president of the United States just went out and fired the head of the Labor Statistics Board because, frankly, he didn't like the numbers and he thought it was rigged. Again, I've been saying for weeks that there is something wrong when ADP weeks ago was showing very weak employment numbers. Then the government literally came out the next day and showed numbers way better than anybody could have expected. And the market ate that up and rallied higher. Now the U.S. government is coming back and saying, whoops, my bad, those were not accurate numbers. So we'll see who the president decides to appoint now, but at the end of the day, I wouldn't trust a single thing that the U.S. government reports because I think it's all being manipulated. Personally, that's my take. I would rather listen to ADP, who's actually paying the people through payroll services and is hired by large, small, and medium corporations. But do whatever you want. But the jobs numbers are constantly going to be whipsawing this market now back and forth. Why is that? Because the Fed's mandate is twofold. One, control inflation, which what we also heard is that the unemployment rate ticked up, the jobless claims went higher, hiring is slowing, and yet also the go forward of tariffs implementing financials, some companies are beginning to comment on that. Okay, so now you have a couple things that are spooking the market. One, wow, these tariffs probably are going to cost consumers more money. Well, duh. Who pays it, right? So the government's bragging about how much money we're taking in on tariffs from importers that are bringing goods and services in from overseas. And our government is making all this money, but who's paying for that? The corporations and the people in the United States. It just baffles me how this is something that's so fantastic for the overall economy. But not here nor there, right? Trade the news, trade the numbers. On Thursday, again, we have U.S. productivity, we have labor costs, wholesale inventories, and then consumer credit. And then Friday, nothing is scheduled. So it should be an interesting week. There'll probably be a lot of political rhetoric around the legitimacy of what the government just reported. And then again, what's going to get reported even further with jobless claims this coming Thursday. So keep an eye out on that. When we think about companies with earnings, we do have a lot of big tech names that are going to be announcing this week. So we're going to have Palantir on Monday after the market close. We are also going to have AMD after the market close on Tuesday. An interesting one, I think, to also watch are going to be some of the EV makers like Rivian. That's going to be after the close. And then before the market open, we're going to have Uber, Walt Disney, McDonald's. So these are going to be, pretty much S&P movers and Dow movers. And then pushing on later in the week, we're going to have some more of the overall consumer names and a bit more technology. And then we'll finish up Friday, which will probably be more of a non-event. So it's really going to be the middle of the week to see what these Dow and S&P companies have to say as to whether or not we head higher or lower. So let's go ahead and take a look at some of the individual charts. I'm going to start with SPY. We now have a gap fill above, right? So we're going to have our daily gap where the market closed compared to where the market opened, and that's where this gap will now sit on the charts. Now note that they have pushed down lower here in the past, in July on the 16th, where we've come down into this range, and then we made all new all-time highs. Now, what we didn't have was we didn't have weak job data. We had really strong job data back here, right? We didn't have any inflation. We had no tariff commentary. Now that that's coming into the mix, we've had quite a pullback, which was much needed, right? I'd love to see this pullback further to this lower gap fill. That would really be a win for us as traders and the market, right? Is to come back down to this 600 level. So do keep that an eye on that. You can see my levels here. I've removed a few of them as I'm trying to just stick with the higher time frames. Again, daily, 4 hour, 1 hour. So we'll watch this again to see where does the market hold. Come Monday, right now they're bouncing it off this 620 level, right? So think even numbers, 620, 610, 600, 690, even in odd numbers, and they're kind of now just teetering back and forth in this range. So we really want to get above 622 or drop below 620 to head lower. Now, mind you, we do have a lot of buyers down here, okay? So a lot of people were buying, not as many people up top, which is why we're able to fall so fast. Let's go ahead and take a look at QQQ. We're going to have the exact same thing. We have a nice large gap fill up above. Again, you do your gaps on a daily time frame. Candle wick low, candle wick high, nice big gap to the downside, driven obviously by the weakness in technology. So the two that really drug this down hard and fast was going to be Apple and Amazon. Both of them. Apple had really good earnings, but they have no answer as to what they're doing with AI. And essentially, Tim Cook said, we're ready to implement and move forward with AI. We might do an acquisition, but not till we launch a new Siri in 2026. So that's still how many months out? 6 months, 9 months, a year? We don't know. But the market's pretty much trading between these levels here. So this is what I would keep an eye on. Here's a great example of, where the market has found a base. So this is where I might use a 15-minute candle low to watch this level, that if we break here, then we should head lower. Now, mind you, look at this. We don't have a lot of buyers holding up the market here. We have a lot of sellers here, a lot of buyers here. We're balanced. We drop below this pivot. The bottom will fall out of this because these are only 45 and 30-minute time frames, and then we're going to head down to this 549 level. So I would definitely watch for continued weakness, a push up possibly in the Qs to then head lower. Let's take a look at some of the individual names that are going to be reporting. Palantir. Again, if you're going to try to trade options the day they're going to announce, they're not going to move very well, and they're going to be exceptionally expensive, okay? So the other thing is, if you want to play earnings, you have to know and understand what the implied move of the stock is. Is it going to, projected move up 5%, 7%, 8%? Because if you're buying the contract with an overly elevated level of premium and only moves 1%, then you don't win on calls and you don't win on puts, okay? So it's called IV crush. The implied volatility that was priced into the options contract for the prospective move has to happen to really get paid. Now, those of you that went long on Facebook earlier last week got paid handsomely because they weren't anticipating Facebook to move 12%. So if you're anticipating a move of 6% and you get a 12% move, winner, winner, chicken dinner. But if you're anticipating a move of 6% in a stock and it moves 1%, nobody wants the calls, nobody wants the puts. On the market open, you'll just see the implosion of the value of the contract. So these are some really solid levels here. Could get another bounce here at 154.92 if we get some strength. We really have some sellers up here at 160, so there's room to the upside on this. I definitely wouldn't be shorting it going into earnings unless we have, very weak market momentum in the futures on Sunday. Another one that's going to be announcing earnings that had a tremendous amount of contracts being bought out of the money to the upside is going to be AMD. Remember, this one has a price target upgrade to $200 a share. We're in, again, a fair amount of demand. I really like a buy down here. If we can get a quick push down to this 167 level, stabilize to go higher. But this thing has clearly been on a tear to the upside that's literally had no stopping it. But definitely, the 50 fib is going to be somewhere here around this 163. Let's go ahead and do it on a higher time frame so you can actually see it. But I'm going to go ahead and grab a pivot low to a pivot high. And look at this. Literally bouncing off the 50 fib where I literally have a price level. Okay, so this is this very, very strong zone. Ideally, watch for a bounce here at the 200 SMA or down here to the 618. But if we fail the 618, then my next price target is the 786 and then lower. So this is definitely a layup that I'm going to want to keep an eye on first thing Monday morning. Another one, SMCI is going to be reporting earnings as well this week. Again, a nice pullback to our price level that we have. Let's just go ahead and throw a fib from this pivot low to this pivot high and look at where it was bouncing at the 50. Okay, they bounced it once, twice, 3 times. If they can hold this, then definitely I think there's an opportunity for this one to go higher. So we're going to keep this on. If we fail the 50, right, we're in the golden zone here. Ideally, this would be a great place to take some calls. Look at where this 618 lines up. Reject, 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 reject. So my ultimate bounce trade would be right here. Now, if you're going to take the bounce at the 200, where you're going to stop out of the trade, you're going to stop out if you get a candle close below 5403. Okay, so use the fibs as an area that you would actually get out of the trade. Another one that's going to be announcing earnings, I like this one actually probably to the short side, is going to be Disney. So we are now actually bouncing a level at this 115. They've had a really good run up, but you got to remember this stock was in the toilet forever, right? Let me take a look at this, and I just want to make sure that we have a valid gap fill to the downside, which I believe we do. They're also created a new gap. We do. We have a gap fill here, which is where the 200 SMA is. So this thing is pretty well overextended to the upside. And with Netflix just eating everybody's lunch, I just can't imagine that Bob Iger is going to come out with outstanding results for parks, movies, and everything else. Now, I could be wrong, but if you get a fail below 115.92, I definitely like puts in this one. We have a fair amount of buyers here, but the air gets a little bit more thin down here at 113 and then down into 110. And then if we lose it, all the way back down into a gap fill. So keep an eye on Disney. I think it's another one worthwhile. Again, a lot of sellers up here. So I think that the opportunity is probably more to the downside than it's going to be to the upside. But we shall see. McDonald's is going to be announcing. Now, McDonald's, this one could be 6 of one, half dozen of the other. And it's right like a chicken McNugget meal. If inflation is going higher and people are getting concerned about money, right, where are they going to eat? Well, they're not going out for steak. They're going to be going to McDonald's and getting the double quarter pounder with cheese. Okay, so you can see here on an interim level, push up, fail, push up, fail, push up, fail, right, push up, fail. Now they're kind of using this little trend here as support. So watch this area. It's very narrow on McDonald's, but they're going to be reporting earnings coming up, looks like on Wednesday. So you might get some push to the upside, and then you can see that this stock prior was trading all the way up here at 325. So we're at a point of decision that we had the consolidation down here at 284. This was on some of the overall news scare with people that were getting sick, and it has clearly recovered. So looking for this one probably for a bounce, especially if the economy is slowing, because their customer base will pick up. Apple, again, good earnings, but no great guidance on what's the plan for AI. So this one, again, I think could head lower, but I would be cautious because we're getting into an extreme amount of demand all the way down here at 200. right? So if we come down to this 201, 200 number, I think you could get a good bounce. Also note we have 1 week demand, which is fairly strong, and it will be harder to break that than anything else. So watch Apple if we get a little bit of a reprieve to go to the upside. So they opened, right, on the market post earnings all the way up here to the gap fill, but then as the market opened and we just had the bad jobs numbers, it was just pretty much sell everything. Same thing with Amazon. Amazon did not have great numbers. They beat on earnings, but the issue here is that Microsoft and Google are taking all of the cloud-based computing customers, okay? So Amazon's growth was only 17% quarter over quarter, whereas Google and Microsoft were reporting 60, 70, 80% client growth in cloud computing, okay? So right now, AI has been the name of the game. This thing just plummeted, sold off heavy. And it's also, what kind of drug down the market. Now, I think it's just going to take some time to digest this as to, okay, well, is there further opportunity back up to 240, or are we going to head lower back below the 200 level? So watch this potentially for some puts, right? You got the 200, you got VWAP up here, you got a fair amount of sellers. So if we can't get above this 215.33, definitely I do like the put trade for us to head lower. And then one last one, just healthcare. Healthcare stocks took a bath, but United Health Group just keeps taking it on the chin. This one, I don't necessarily like it for calls. I still like it for puts. So looking at the downside trend on this thing, they reported earnings, they missed, did not give great guidance. But look at this on a 1 hour time frame. We don't really have any buyers, right? And I think that the buy for this is going to probably be around 220, somewhere way down lower. So let's go back and see where we have a price level that is going to actually give us some stability. And it looks like we're probably right around in this area here, which is somewhere around 214, right? I mean, that's a good drop lower. So I think there's probably still more pain and more pressure in this name. But let's go ahead and also check one more thing here. We're going to want to watch on a daily time frame. Overall, we have the the 200 all the way up here at 463. So this thing is still looking like there's more pain to the downside. Break 235.12. My next price level is 227. Again, low level of buyers, 30-minute, 30-minute, 45-minute. The dailies don't even come in here till 201. So keep an eye on that for a short. But again, when we are in earnings season, sometimes it's better just to sit back, let the company announce its numbers, and then take your trade from there. So with that, everybody, have a fantastic week, and I will see you all Monday morning for live trading at 6 a.m. Pacific Standard Time. We'll all talk soon.